Institutional capital have recently turned more bullish on the Asian markets after a 5-year-long dip. The question now is rather what regions that will give the best investing opportunities. Many investors point out India as the number one, not at least thanks to attractive demographic and a reform-driven government. Anand Radhakrishnan, Franklin Templeton Asset Management, very welcome.
Hi.
Expert in India and based in India. India's growing the GDP growth, almost 8% this year. Amazing number, of course. What is driving the growth?
There are some structural factors which are helping India. Of course, demographics is one such, young population, more people getting educated and joining the workforce, very high savings rate, and an investment rate as well. That is amount of money invested in India. It's roughly about 30% of GDP. More households joining the middle class income bracket, which is also leading to good consumption boom. These are some of the structural elements that is helping India to grow at above 7% GDP growth rate. Some cyclical factors also are helping this particular process. India was at a very high inflation between 2011 to 2014. Our average inflation ranged around 9%, consumer price inflation. We have seen that kind of trending down, and along with that, the interest rates have come off. And on the combination of falling interest rates, we are seeing some cyclical upturn in domestic demand as well. So both structural and cyclical aspects are combining together now to lead to a slightly better growth rate than what we averaged over the last 3-4 years.
Many emerging markets are dependent on the commodity prices, not at least the oil prices. But for India, it's sort of the other way around, isn't it?
Yeah, India is counter-correlated to commodity prices, especially the energy prices. India is a large importer of energy, oil predominantly. As an economy, we import close to 1 billion barrels of oil per annum. And any fall in oil prices directly translates to domestic savings. At the peak, we used to pay $100 plus per barrel of oil. Today, our economy is paying $50 per barrel of oil. And that leads to about $50 billion per annum savings for the economy. This translates to higher savings, less fiscal deficit from the government, because government typically used to subsidize whenever the oil prices go to higher levels. So yeah, lower energy prices tend to help the economy pretty well.
Are there any threats to this amazing growth in India, would you say?
We don't see any near-term threats. We think the economy is well balanced. There was at a time, because of high energy prices, we used to have current account deficits, which was at the peak was about 6% to GDP deficit. This led to instability in rupee. Now the current account seems to be pretty well balanced. In fact, we have a mild surplus in the current account. We also see fall in commodity prices have led to better financial situation for the government. The government fiscal deficit has come down from 6.5% to GDP to 3.5% to GDP in the last 5 years. So both from a fiscal perspective as well as from an external flow perspective, the economy seems to be pretty well poised at this point of time.
What about the India stock markets? We hear so much about all the Asian stock markets. It seems like India is sort of a little bit flying under the radar, not so much buzz from the institutional capital compared to China at least. Why is that, would you say?
Being the second largest after China, India has always been kind of a bit overshadowed in the past by the stupendous economic growth rate of China. Having said that, Chinese stock market have not been easy for investors to play on, whereas Indian markets have traditionally been a good investing ground for foreign investors. Today, foreigners own close to 23% of the market, roughly close to $350 billion of Indian equities. We see this interest to continue going forward. More recently, the stock markets have been quite positive on a year-to-date basis as well as on a 1 or 2 year basis. Ever since the new government took office in 2014, we have seen the positivism to the stock markets improve, and we expect that to continue as well.
And would you say it's the companies are open, it's good corporate governance, which is so much debated in China?
India offers a wide range of companies from various sectors. There are companies which are play on domestic growth. There are companies which are export oriented. But one of the common trend we have seen across various sectors, whether it is banking or automobiles or consumer staples or healthcare or information technology, is the rising standards of corporate governance across the board. Today, the boards are much more independent than what they were about 10 years back. The level of disclosures have gone up. The minority shareholder practices towards minority shareholders have become friendlier. And we see that trend continuing as we go forward. There are lots of local government policies which encourage better corporate governance. The more the market gets institutionalized, we see the institutional investors play a positive role in shaping up the corporate governance practices within Indian.
And what about the valuation of the stock market compared to the profit growth of the companies? Is it attractive valuation right now?
The long period earnings growth for the Indian market has been on around 14 to 15%. In the shorter term, in the last 5 years, we have seen that earnings growth come down to around 7 to 8% because of various factors: high inflation, high interest rates, cost pressures and margins coming down.
And the valuation?
And we see the earnings now growing over the next 5 years above average growth rate. So probably in the next 2-3 years, we expect the earnings to grow at 17-18% per annum. And currently the market is trading around 16.5 times forward earnings. The long period average is around 15 times. So if I can say that the market is slightly trading above the long period average in terms of earnings. But if you use other metrics like price to book or market cap to GDP, we see that markets are trading either at average or slightly below average. The reason why it is trading above average on a PE basis is that the earnings are subdued as of now. And once the earnings are cyclically normalized, we see that the PE also normalizing. Okay. Just to sum it up, while the markets have run up and it looks optically that the PE is a little bit higher than the long period average, we are not too worried about that.
So attractive valuation, attractive investment opportunities, and finally, what companies or what sectors should one invest in India now? Excuse me.
Today we find reasonable value in a couple of sectors. One is banking sector. Banking has been a structural growth story in India. Many
state-owned banks, aren't there?
India has a lot of 30-odd state-owned banks and about 7-8 privately owned banks. While state-owned banks have their own cyclicality, we have been more bullish on privately owned banks because privately owned banks are more innovative and more customer-friendly, use better technologies, and have generally been better in risk underwriting policies which they follow. Many of the state-owned banks are still struggling with some of the delinquent loans or non-performing assets, as we call, from the previous lending boom, so which we are yet to see that fully provided in their books. So we are positive on the banking, but we are skewed towards private banks than state-owned banks. Some of the other sectors which we are bullish are ones which are focused on local growth, which is automobiles, some of the consumer discretionary items like consumer durables, and infrastructure and capital goods at this point of time.
Okay. Thank you very much for coming here.
Thank you.
Thank you.